So for question 3, you are supposed to calculate the working capital of the business, the net assets, and then for part C, we're supposed to state 2 ways a business can increase its working capital. So when you're given all the assets and liabilities of the business, it's a good thing to indicate which one are assets, which one are liabilities. So cash at bank is an asset. However, if you see CR, it means that this is $10,000 credit. So this becomes a liability. Okay, and it is a current liability. The reason why I need to know whether it's current or non-current is because I need to calculate my working capital. A loan is also a liability, however, this is a non-current. Trade receivable is an asset, it is a current asset. Other payables, liability, current liability, asset, asset. Both of these are my current assets. And then my trade payable is a liability and it's a current liability. Okay, so the first one is to calculate the working capital. Always write down the formula. So you have working capital is equals to your current assets minus your current liabilities. Okay, so because we're supposed to show all working clearly, you have to write down current assets. So what are your current assets? If you look at which one is CA, the first one is 53,980 plus your inventory. Okay, 3,400 plus your cash in hand, $230, right? And then you have your current liabilities. For your current liabilities, the first one is your cash at bank plus your other payables plus your trade payables, all right? So current assets minus current liabilities, and this will give you 27,610 as your answer. For part B, when we say we want to know what is the net assets, we simply just take all our assets minus our liabilities. Okay, so the formula here is your net assets is equals to your total assets minus your total liabilities. Right, so what are your total assets? Take all your assets, so look for all the A's. So in this case, we have the first one, 53,980 plus your inventory, 3,400 plus your cash in hand, 230. Okay, and then you have your total liabilities. In this case, you have your bank overdraft, $10,000. You also have your loan now, so plus 20,700. Plus $9,000, and the last one plus $11,000. And this would give you $6,910. Last one, part C, state 2 ways in which a business can increase its working capital. So what happens is, remember, working capital is CA minus CL. So what we want to do is to, of course, increase our current assets, or we can decrease our current liability in order to increase the overall working capital. So these are some ways in which you can increase your working capital. If the owner contributes cash, CA will go up. Okay, so if the owner contributes cash, your current asset will go up, and this in turn will increase your working capital. If the business takes up a long-term loan, the reason why you need to say long-term loan is because if the owner takes up a short-term loan, then your current asset and your current liability will both go up. and therefore there would not be any effect. So if the business takes up a long-term loan, then only your current asset will go up because the money will get deposited in your cash at bank account. So this one will cause your current asset to go up, and your current liability is not touched at all. Okay, what the business can do is to sell idle non-current assets. So non-current assets like your motor vehicles, your fixtures and fittings that are just sitting around and you don't need them anymore, you can sell it for cash. And when you sell it for cash, your current asset will also go up.